ladies and gentlemen. It's Eric Kaufman. It is November the 3rd, 2020. I'm talking to Ian Claassen before we all go and watch the election. He put out a long-awaited news release this morning. This is the update of GMVs, and of course that's GMV on the venture. It's an update to their preliminary economic assessment of the Mexican Hat project in Arizona. As shareholders, I'm sure, are aware, they did a bit more drilling since the last one. In large part, that was really to add some ounces, but it was also to bring down the strip ratio because the previous version of the resource and the previous version of the PEA included more waste just because there were sort of holes in the drilling. I can see from the slide, and the slide that you're seeing here is sort of the highlights of this. That's one thing that I see right off the top is that the drilling did in fact succeed because your strip ratio has come down quite a bit. It's down about 40%, give or take, from what it was in the last one. Before, basically stealing your thunder, I mean, do you want to kind of walk us through where we're at now, Ian, and how this has changed from the 2018 version?
Yeah, absolutely, Eric. Thank you for having me today. Yeah, we're very excited about today's news release. It's been a while being built during this year, and it's nice to be able to finally talk about it in the public domain. The report has a number of very positive variables in it, as you can see, not the least of which is we go from a 5-year mine life previously to now a 10-year mine life, open to expansion in 3 directions. This is a 10,000 ton a day circuit with nothing extravagant. It's conventional heap leach. Our strip ratio has gone down under 2 now, which is great. The report itself has an average production rate of 52,250 ounces a year. So the life of mine is actually up just about 50,000 ounces, which is not an inconsequential amount. It's about 100 million Canadian. So that little drill program we did in 2019 in order to fill in some resource gaps certainly did its job. The other thing to point out is we've gone from $130 million capex, including contingency, to 67 million, and of that, 12 million is contingency. So we've certainly had some positivities as it relates to the mine life, as well as the average annual gold production, and the IRR is nothing to sneeze at. At $1,600 base case, we've got just about a 40% IRR pre-tax with a payback of just over 2.8 years. But it's really the net present value that we're especially excited about. When you look at pre-tax NPV at a 5% discount, we've got a $153 million project from a cash flow standpoint, and by any standard, that's an improvement over where we were.
Yeah, I think one thing that's especially important to note, and the release this morning included current gold price numbers, and just to give you the after-tax ones at the current gold price, you got an IRR of 44.3% and an after-tax NPV 5 of 182 million, 2-year payback. And the payback and the ratio of NPV to capex is, to me, that's what really jumps out. When you did the study in 2018, I think you heard from a lot of people, including me, that the problem was although it was a good study, had a positive NPV and all that, the NPV was essentially a little bit smaller than the capex, which is not the easiest thing in the world to finance. And now you're dealing with, like at current prices, your NPV is basically 3 times the capex. I think that puts you in a much, much more favorable position when it comes to pushing this thing forward and looking for financing, or for that matter, looking for a buyer.
Yeah, that's right. I mean, the engineers at Samuel Engineering really did take a different look at this, and which can be demonstrated on a slide here. This is a makeup, if you will, of what the the PEA envisions, with 2 pits of mine development. The south pit being the smaller, it's quite rich, and especially to the southeast. We know the mineralization continues for about 3 kilometers to the south. But we'll mine the south pit for about 2 years, and then the remaining 8 years of the mine life as it exists today will be addressing the north pit.
Okay. And I guess the other thing here too is I think you probably made the right move going to the 10-year mine life. I think that was probably another thing that might have been problematic when it came to financing the original PEA. Was, I mean, you had higher production, yeah, but you had a 4.5 to 5 year mine life, which I think probably would have been a lot trickier financing wise. And I guess this go around, one thing that changed is you've gone from sort of owner operated to you would be bringing in contract miners to do just about everything, I guess.
Yeah, that's right. This would be a turnkey mining operation. Nobody needs to learn from other people's mistakes. We're going to get professionals in to do this, and that's why our cash production cost has gone up to $951, and an all-in sustaining cost at just under 1,050. But well worth it to know that we've got professionals in on the ground and overseeing the operation.
Yeah, and well, I mean, that accounts for a lot of the change from 2018, because obviously the mining contractor has to make a living too, and he's providing a lot of gear, so it makes sense. So now that you've got this PEA in hand, and it's a much improved one that I think the market should like quite a bit, where do you go from here? What's the next steps for GMV?
Yeah, this next slide I can bring up. This so here's the north pit. Here's the south pit, if you can see my mouse moving.
Right.
We spent quite a bit of time, Eric, in this last reporting period to have a very close look at some of the expansion opportunities at the Hat. And so we did bring in and had access to some world-class experts that are very familiar with this type of deposit. We actually got them boots on the ground in Arizona, looked and went through all the data that we have at our disposal, both past and present. And so there's a lot of hopefulness to drill to the north. These 2 areas here, we're hoping and could well be the feeder resource itself for the Mexican Hat. And to the southeast, which then upward as well, this area here is we're very optimistic about being able to continue to add tons and ounces here. This is a pit that has contained structure, and we're following the structure. It has all the same hallmarks. And the last time we drilled in this area, we had some of our best grades at over 2 grams, and that would certainly do a lot to improve the overall grade of the deposit itself.
Right. Okay, and this is something you're planning to get onto. I mean, what's involved in drilling this? You need to permit this, I imagine.
Yeah. So some of these holes are on private land. The vast majority are on state and BLM. There is a process to it. We're running some preliminary studies on native plant surveys and things of that nature right now, so that in the probably early new year we'll be able to complete that program before we take a look at then infill drilling into the deposit itself, so that we can improve the category from an inferred to largely a measured and indicated category as we would move towards pre-feasibility.
Yeah, I mean, you've got to do the infill drilling at some point anyway, but I assume if you're getting some love from this expansion program, you'd probably just throw more holes at it first, because it could well change the geometry of everything.
Exactly. Yeah, that's exactly why we're doing it in this order. And it won't be long.
And the other thing that I expect shareholders want to know, I mean, you didn't have a lot to talk about this year. You've done the drilling. You were working your way through an updated resource estimate and PEA. Now that you got this stuff out there, are you planning to kind of work on raising the visibility of GMV and kind of getting out there and telling the story now that you've got this new set of numbers to work with?
Without question. I mean, we're already dedicated to do that. As you know, we've had some interest in the United States. We now have listed on the OTC QB market under the symbol GMV MF. We've done some recent marketing in the New York State area, as well as at the New Orleans Investment Conference. I look forward to joining you and your colleagues on Thursday at the Metals Investment Forum. And we will continue to work in an aggressive way to make sure people understand that this is looks like a very viable project in an excellent jurisdiction in the southwestern United States. And these numbers speak for themselves. We should certainly be able to move forward. We're currently valued at about $13 or $14 million market cap Canadian currency, which I think undervalues us.
Yeah, I mean, I mentioned to somebody a couple of weeks ago, they asked what I was hoping for, and I think at the time you were sitting at about a 11 million market cap. And I said, well, I'd like to think at current gold prices, they're going to come back with a PEA that's got an NPV that's like 15 times that size. And as it turns out, it's more like 20 plus times that size. So I'd like to think that current shareholders and some new shareholders coming out of the market are going to give you some love. I mean, there aren't a lot of easy low capex projects out there right now, and I think Mexican Hat putting up these kind of numbers, I suspect you're probably going to find yourself getting attention from several quarters here fairly quickly.
Well, we hope so, and it's worth pointing out. You know, we've only spent about $5 million on this asset.
Yeah.
We were able to acquire 100% interest in it in 2014, weathered some difficult years for raising capital in the junior markets. But to come out with this result and having only spent about $5 million, we think that there's some significant shareholder value being created here, and we look forward to continuing to do that.
Yeah, no, I think it's really good news, and I think GMV's future, which I always thought was bright, is probably getting quite a bit brighter today. So that's GMV Resources, GMV on the venture, GMV MF on the QBB in the US. Fairly tight stock. I'm expecting it to keep responding well to this news as Ian gets out there and markets it now that the news is out there and he can talk about it. And it sounds like we can probably expect an update relatively soon on this new drill program that you just alluded to a couple of minutes ago.
Exactly. Yeah, we'll have a very comprehensive.
Of it.
Yeah, we'll have a comprehensive news release out along with built-in rationale as to why we're drilling where we are. So yeah, that won't be long.
Okay, sounds great. Thanks very much, Ian. Thanks for coming by.
Thanks, Eric. Appreciate your support. Take care.
Yeah.